There's nothing more exciting than putting pen to paper when you're signing a contract to sale. The adrenaline's pumping, the nerves starting to break out a little bit.
There is nothing you can do, really, there is nothing you can do to compel the vendor to settle on time. It's so unfair for the buyers, but that is life. Do not make any sort of terminal arrangements with respect to the rest of your life completely reliant on settlement happening on the day that it's on the contract. Don't terminate your lease.
Don't book the removalist truck to be there at 2 p.m. when settlement's at 2 p.m. Mate, you know what I say? If you got a purchase, settle on a Wednesday or a Thursday.
Yes.
Friday afternoon is the worst day to
100%.
be settling. I just don't understand it.
The client doesn't really differentiate between why settlement's late. They just think everyone just should experience.
A bad client experience deters people from buying property again. They just think that's the norm. You pick your team, right? Have you heard of the broker? Have we heard of the conveyancer? Things going off the rails that really define a client experience. G'day everyone. There's nothing more exciting than putting pen to paper when you're signing a contract to sale. Whether you're a conveyancer or solicitor's in the firing line, when you're putting pen to paper, we want to unpack all of that today and what goes on behind the scenes when you are signing a contract to sale and getting your loan approved as well. So Jared, welcome on, mate. How you doing?
Very good. Thanks for having me.
Mate, I appreciate it. Our paths have crossed. I've seen you, quite prolific in the industry as well. I think you're quite a large firm that handles a lot of contracts to sale in this space.
I think we're the largest in New South Wales.
Yeah.
And we're in the top 5 nationally. So,
that's fantastic. Yeah. That doesn't happen overnight, mate. What's been the accelerator?
It's nothing in particular. It's just been sort of 10 years of just, trying to do things better every day, getting good people. Obviously could not be where we are today without having really good people. So no secret recipe, I'm afraid. But
it's hard work.
It is.
It's hard work. It's like to say anyone building a portfolio, building a business, the secret is it's hard work.
Yep.
If you want it bad enough, you'll get it.
Having said that, I did have a little bit of help with PEXA. So, so 10 years ago, paper settlements was the thing. You probably remember all that.
Castlereagh, up at Castlereagh Street in the city is crazy.
We could not be operating on the scale we're operating right now with paper settlements. Impossible.
So
that's definitely one. That was one help we got for sure.
Yeah. Were you there that day? When the Lint Cafe got held up?
Of course, yeah.
And that was, I think, just before, somewhere close to Christmas.
Yep.
Somewhere around there. And they shut down the city, for example, and all those settlements fell over that. I'll never forget it.
Yep.
And it pushed it into the next day. And that became, I think, the biggest settlement day in New South Wales history, I believe.
Imagine if that happened during COVID.
Yeah.
Imagine we were still on a paper system in COVID. It would have been a disaster.
We were still signing mortgage documents.
Yep.
I'll never forget it. Like I had my assistant come to my house, drop it at my front door, leave so I could witness it. Send it into the city to St. George or whichever bank it was, but no one was in the city to pick it up. So these mortgage documents are in like these PO boxes and no one can come into the city to pick them up. And I was like, I think the penny dropped for a lot of banks at that point. Let's go digital documents at that stage. Yeah. It's crazy.
Well, it drops pretty slowly because the government, to their credit, they actually came out pretty quickly and said, shit, we need to actually legislate for electronic witnessing of signatures or wills or that kind of thing. So the legislation was put into place pretty quickly during COVID, but we still had, even during the second and third phase, I won't name the banks, but there were big banks that were saying, we don't care what the legislation says. We want a wedding signature.
Spot on.
And I had clients traveling to my office, with masks and coughing, and I'm sort of sitting back for them in the middle of COVID trying to get these loan docs witnessed, all because the banks just didn't want to change their processes. The law allowed them, but they didn't want to do it.
Mate, spot on. I think it even just continues to this day where as soon as someone buys a property, they suddenly have this overseas holiday planned as well.
That's one of the laws.
Number one rule, if you're listening, signing a contract to sale, please do not go on holidays the next day.
That's spot on.
How many times? And so we're trying to get documents. How many times I've got bloody tracking numbers coming across from Europe or guarantor loan documents going halfway across the world, sweating on them coming back in time.
I've got a couple right now.
There you go. Yeah, it's doesn't matter how much we say. I think that will continue. I'll keep beating this drum, but mate, we're going to cover a fair bit of ground, and I feel like the turf will cover today a lot of people's questions around, hey, what actually happens when signing contracts to sale? Particularly the bank and mum and dad conversation, I think, becoming more prolific with what we're seeing from a lending perspective. Also settlements and cooling off periods as well, because they're probably those peak stress periods. And I think it doesn't matter how much we tell people, hey, mate, we've got this. I think there's still a natural inclination to go, but I need to sweat. This needs to be stressful. And we're kind of just going, hey, mate, it's under control. So let me just, and again, we don't beat our chests, but on my watch in our business, we have never lost a deposit and we've never missed a settlement that we can't complete.
Wow.
And I say that because literally yesterday, Nate in my team got a call from a new client, submitted a loan. The brokers, I think, are now on the third or fourth submission.
Yeah.
They've got 3 extensions to finance. They will not get another extension. They've got settlement literally about a week and a bit away. And Nate's like, yeah, give it to us. We'll do it. And we'll literally have it ready for next week. And again, no chest beating here, but it just says to me, your industry, our industry, it's not a level playing field.
Yep.
Isn't it? Like you just see, I don't know if it's, I'm very hard. I don't want to call it incompetence. Sometimes I think people just bite off more they can chew and then they try to chew like crazy, but there's got to be some red flag nice and early that it's like
100%.
You're putting square peg in a round hole.
The first thing we do, and there's some very bad conveyancers out there as well, and solicitors. But the very first thing we do when we get a buyer, particularly a first-time home buyer for the first time, our first question is, who's your broker? And if we know who they are, if they're reputable, if we've worked with them before, or they've got a good reputation, we tend to know who they are. And you are one of them, Aaron, of course. We get a sigh of relief. But if we've never heard of them before, that does induce some panic because anything they miss, that's going to become our problem. The client doesn't really differentiate between why settlement's late. Was it the conveyancer's fault? Was it the bank's fault? Was it the broker's fault? They just think everyone
you're lumped in all the same.
To a shit experience. So so it's really, really important that the team's strong.
Yeah. And that's I think why we again, we're not perfect. I've said it plenty of times before. Things will happen. I think it's how you deal with things going off the rails that really define a client experience. But I really hate on my watch a bad client experience because it really deters people from buying property again and again. They just think that's the norm. Quite often the exception to the rule. The rule is that things could and should go smoothly, for example. But sometimes it just picks out a certain client or a certain purchase and it's going, geez, mate, nothing. Yeah. The dominoes just keep falling and we're trying to get this back on track. And I think that's obviously where our experience and expertise starts to come into it. But I think there's also a level of empathy going, hey, mate, we'll get there. Yeah. You just got to persevere a little bit as well, right? Yeah.
Even to acknowledge their emotions as well, I think, because, I think we'll get onto this, I'm sure, but, SMSF deals, for example.
Oh, dude.
They're a nightmare. And it doesn't matter how good a broker is, how good a bank it is, how good the conveyancer is, there is just such a density of documentation and rigmarole that it's going to be stressful.
Thank you, mate. I think we've said that so many times. I think we've covered this even when I had Damien and Nate on my brokers and just talking about people underestimate how much work is involved with an SMSF purchase.
And I just wish probably brokers, to be fair, because they're the first point of contact on SMS deals, I wish they would just explain that to the clients from the start because a lot of them just think, the actual buying of the property is relatively smooth. Correct. And they think this is okay, this is not too bad. And then, 10 days ahead of settlement, they just get hit with this massive volume of documents they need to execute and requirements, and then they need to go see another solicitor because their solicitor is not independent apparently. All needs to be wet ink apparently, even though everything else was electronic. And it's just the shock. If they were told from the start, say, look, this is how the deal is going to go. It's going to be pretty simple to start with, but once we get a deal, there's going to be a lot of documentation. But this is how we're going to do it. We're going to get you to this independent solicitor to get your independent legal advice. We're going to make sure you're in the country. We're going to make sure that, you can wet ink. But for almost everyone I deal with, it's always this massive shock.
Correct.
Yeah.
And I think to that, it's even just when you go upstream, like the rollovers. Like the rollovers could take we did one, it took almost 2 months. Client missettlement it wasn't fun at all. And I think those kind of stick out with you, just going, mate, lessons learnt. I think the people underestimate, I'll come back to it, underestimate how much work is involved. It's an incredibly great investment vehicle. You've just got to realize that there is a bit of legwork that's involved when it comes to an SMSF. So I'm glad we've kind of ticked that one off the list and said, all right, if you've heard it once, you've heard it twice. Let that little penny drop.
If someone tells you an SMS deal is going to be smooth sailing, they're lying. It's not. It'll be fine, but it's going to be stressful.
Look, you also got to understand, and again, I love our lender partners in this space as well, but quite often a lot of them will then have to go to their funder. So what happens is it goes to one bank, but they roll up into another funder. So they've got to go. They're almost another intermediary.
Yeah.
So we're an intermediary. I'll send a loan to them, Bank X. They'll then send it to their funder.
Yep.
The funder will then ask questions. It comes back to these guys, then back to us, and back to a client. And so it's like almost 3 or 4 levels of command.
It's like Granite or something. Is it Granite's
one,
yep.
Blue Bay's another, because they get their money from like a funder called Origin, for example.
Okay.
Right?
Didn't know that. Okay, that's interesting.
And so they're almost the masters in this transaction. So they've got to keep going back. It's like when a bank goes to lenders mortgage insurance. Yes. Like they're the ones that make the final decision. So these guys will package up the loan, send it to these this funder. Yeah. They'll then say that we need this information, or we want clarification here. That comes back to this funder, then back to us, back to the client. And so that's why you're getting these almost like these 2, 3, 4 day delays, because they're not actually the ones that have the money in their back pocket. They've gone to someone else to get the money.
No one's explained it to me. That's good.
Well, there you go. Mate, we're all on a learning journey today. Yeah. So that's probably why, again, we see those delays, because there's little chinks in the armor there as well. Yeah. Thanks, Jared. Cool, mate. The big one that I see, and I don't think this trend is going to go anywhere. In fact, it's probably going upwards as a trend, is the banker mum and dad. Yeah. And so I'll get this a lot. So parents will be listening to this, and then kids will be listening to this. And it's probably like no one seems to really understand guarantor loans, to the point that I stopped doing them for a while because it just kept getting so messy. But I think there's a way that we can make family and finances work with clarity and I guess confidence in what is actually going on. So let's get to the heart of this. So the banker mum and dad, I think I've documented this, one of Australia's biggest lenders. I think it ranks about, 6th in the country. Wow. So we've got four or five big banks, but I think Macquarie takes 5 now. And then you got the banker mum and dad. Wow. So that just shows how much, and it also tells me that this is not a level playing field when it comes to finances. Yes. And it's just going to continue to get worse. And I speak to a lot of people that listen to the podcast, and I'm a big advocate for building intergenerational wealth through property. Because in one generation, well, my parents could come to this country, I can then build a portfolio. My kids' lives completely change. That's pretty much one of the big reasons that I do invest in properties, because I've got 2, we're talking about our kids before. That's the only way my daughter's getting into this market. Yes. That's the only way. When parents are asset backed, they're going to get in. Mate, I don't make these rules. These are the rules of the economy that we live in. I'm not fighting it. Yes. So many people try to fight it, go, that's not fair. I'm sorry, mate, you're going to get left on the sideline. Yes. Your kids are going to suffer off the back of that. Well, unfortunately, my kids will prosper. And investors' kids, it's the haves and have-nots that I feel is going to be that next generation, if not already at the moment.
Spot on.
So when we talk about the banker mum and dad, there are so many ways that we can go about this, and I'll go through this, and this cuts across whether you're buying your own home or an investment. Option A, your parents do what they call a guarantor loan, which is using equity inside a parent's property, whether that's a home or an investment property. There's probably 4 or 5 banks that do guarantors off the back of Royal Commission cleanouts and just tighter policy. Yeah. So that's guarantor. The parents don't give any cash. They're using their equity. Option B is the parents give the children cash, and there's certain conditions attached to that, which we'll cover off in a second. And then the third one is sometimes we've seen parents co-buy with their children as well, which again, kind of murky waters, because parents are at a different financial stage and what that means for their retirement too. But mate, let's just go through this. So when you see parents that do a guarantor loan using equity, what do parents and what do children need to be aware of?
Okay, well, starting with the parents, I think that the thing that they need to know is it is a serious obligation. It's a very generous thing they're doing. And I say that from the outset. So what you're doing is fantastic. And some of the things you just mentioned, I might use that next time I'm talking to a parent. This is a great thing, and perhaps it's probably a necessary thing, really. But it's not without risk. And it may, for example, you're at a point in your life now where you're retired. You may have your property unencumbered. You may have sort of quite a small income. This is probably not the time to be racing back into financial indebtedness. And that essentially what a guarantee is. So I try and instill that in them, but I also try and give them some strategies as to how they can minimize that risk.
Great.
The one thing you don't want to do as a parent is just write that guarantee and forget about it. Okay. I insist that there is some kind of game plan, whether it's actually written down, ideally. I don't want to encroach too much into family affairs, but I would recommend it's written down. But if not, at least sort of verbally or informally, that there is a 3 to 5 year time horizon where the guarantee is taken off. Okay. And then we talk about, well, how is that going to work? What's the process by which it's going to happen? How are we going to get equity in the property? And we talk about that. And the third thing that I make sure they do, and I think this is probably one of the most important ones, is as a guarantor, and this is whether you're a parent guarantor or some other type of guarantor, you're generally not privy to financial statements. Okay, you don't get monthly statements from the banks unless you ask. You can ask and you can get them, but generally you're going to be in the dark. So you've got no real idea about how the actual borrower is performing. And often it's the people that are closest to you who are probably the most, I guess, proud about when things are not going so well. They keep that to themselves. If they have lost their job or they've got into some kind of money problems. And it may very well be that the parents, unbeknownst, 2 years into a guarantee, they get a knock on the door from, XYZ bank saying, look, we're actually going to enforce the guarantee. And you're like, what the hell? So what I do really strongly recommend is regular financial updates. We actually sit down at the kitchen table and say, how's things going? Can we look at the mortgage? Okay, we've knocked off 20 grand. Fantastic. Where are we going to be next month? Is that going to all be, you want to buy a car? Okay, how's that going to fit into the plan?
Yeah.
That kind of thing I think is really important.
Matt, I'm glad you touched on a few points. Again, the game plan to release, that's probably one of the first things we do talk about. And ideally, you say 3 to 5 years. I'm trying 2 years is probably my sweet spot. Property increases in value. So you got to think about, I did this example with a client the other day. It was their first investment property. 500K was the purchase price. So, quite a good entry point, fully financed. So zero cash down, 100% financed at 500K. And we need the property now to go to 625,000 in order to have that 500K interest only loan refinance. 80% of 625 is 500. So that gives you a quick example on how the math works as well when you want to release a guarantor off that property as well, and said, right, that's a sizable jump. They're bought in a growth location with a really good buyer's agent. So I'm like, okay, good. That could probably take, it's 10% year on year for the next 2 years. What we can then probably do is factor in maybe an extra 6 or 9 months if the market slows down, whatever it's going to be. But I think just that level of clarity in that conversation that they're having, like you said, peace of mind on like when is this actually going to be released as well, rather than sitting in the dark just going, we're just hoping and praying this property goes up, or we don't know how much the loan's going to get paid down, because the loan's not getting paid down that much in the first 2 years, 3 years anyway, right?
Yeah. Well, that's great. And that's the other thing I forgot to mention is that, we can only tell them what to do. The other part of the equation is you do need a really good broker to actually be on the sidelines waiting, watching, being part of that plan. Because if you have a broker sort of set and forget, write that loan, move on to the next one, rather than a broker that's checking in every couple of years saying, hey, remember we said we're going to try and get mum and dad off? I've just found a great rate here. And,
we've done the reval.
That's gold. That's almost, and again, goes back to my original point is when our first question to every buyer, particularly first time home buyers, and I guess particularly ones who are reliant on guarantors, is who's your broker?
Well said. Thanks very much. So that's what we talk about. Okay, so getting in, getting out, for example. If we go to the second point around cash, and there's so many ways that we can approach parents giving cash. So one is, and a big one is now early inheritances. So it's like, hey, here's your early inheritance to help you get into the market. There's no point waiting 15 years before we cark it, for example. So here's how I'm going to help you get in. A bit of a minefield. And I think, you spoke about it, children, you've got your own kids, blended family sometimes. You help one, you got to help all of them as well. So how does a parent, and what some of the conversations that you've had where parents are now enabling their kids to get in, particularly with the use of cash?
Yeah, well, we see that quite a bit, probably more than guarantees, I'd say. A lot of the time we don't even actually know about them. That's the other thing. A lot of the time we just don't know. And I don't know whether the bank knows or whether there has been some kind of declaration made. Yeah. But generally speaking, when I'm looking at that kind of, when I get involved in those kind of things, it's usually the parents coming to me and saying, look, we're about to make a pretty massive contribution to our beautiful daughter and her purchase with our, we think, lovely son-in-law, their first house. But we want to know what happens if it all goes wrong. What happens if they're 2 years in, they bust up? How is our money? Because that money's really for our lovely daughter and her family. But if it doesn't turn out like that, how do we get our money back? Well, the only way that we can really ensure that is a loan between the parents, and a written loan and a proper loan. It can't just be a one pager. It's got to look and smell like a proper loan. Reason is that we do see in our family law practice, we do see family lawyers of ex-partners actually attack loans as artificial and they say, no, this is a gift. It was a gift that was given to allow the couple to get into the property, and it's therefore part of what we call the matrimonial asset pool. So it has to be a proper written document, and in fact, really has to be a second registered mortgage for proper protection.
We'll come to that in a second. So yeah, the big red flag that happens, I guess, in our world is you present it now as a loan, and then if you have to disclose that to a bank that this is a loan, you'll be able to service that as a loan in the borrowing capacity. And if we're already kind of stretching the limits on borrowing capacity, and I'm being very open here, this is, these are sometimes where you get into gray areas around lending. You disclose that as a loan, servicing falls over. It's like, well, it's a great intention, but the actual implication, the actual reality of this is that's pushing you out of serviceability. And then we move into, okay, well, it's a gift. And that's cool. That has its own knock-on effect as well when it's a gift.
It's definitely a tricky area, Aaron. I've got to be careful what I say. But,
absolutely. And this is why, and everyone's situation is different. That's why, we talk about maybe this advice is general in nature and all that palaver, but it's more just to say everyone's got a very unique situation. So we're not trying to tiptoe and not answer a question here.
One thing I will say though, and so you can read into this what you want, but one thing I will say is that there's no problem with, I guess, backdating a loan document. Okay. There's no problem with doing that. So if, for example, we settle a transaction, and I won't speak to what happened with the bank, what was disclosed to the bank, but just say, for example, there was a $500,000 loan put in by the parents, there is no problem from a legal perspective saying, look, we just want to document that was in fact a loan, and the parties are going to agree that it is to be treated as a loan, and this is after settlement I'm talking about, and the parties are going to agree to put a second registered mortgage on there after settlement, and there is going to be an interest rate applicable.
Cool.
And as I sort of said to you before the podcast as well, just because you've got an applicable interest rate in the loan documentation so that it looks exactly like a commercial loan, doesn't mean the parents can't say, hey, listen, whilst everything's going sweet, we're not going to actually require that payment. And that would sort of just be a verbal comment they'd make to their parents. So
in the event that the relationship breaks up and it's a verbal agreement, what happens in that account? Does the written loan contract override a verbal agreement?
It probably would. It probably would. So I have had situations where ex-partners, the partners whose parents are not the lenders, they have been uncomfortable with those arrangements. But at the end of the day, they generally take the view, well, this is what it's going to take for me to get into the property ladder, so I'm okay with it. So, but it's a tricky area. It's definitely a tricky area.
Absolutely. It's super tricky, and, particularly when we start talking about, and no one wants to come in with this conversation as a parent. I'm giving this money. What happens if the relationship breaks down? Like we're talking about buying an asset a house, and they're like,
I do that.
And we'll have this all the time. Parents will call us on the side.
That's right. I do that. Yeah, they do call on the side.
They'll call us on the side. Just going, hey, I'm just really curious. What happens if if they break up? I was like, yeah, exactly. Thank you.
It's always the father too. I've noticed.
Oh, well said. Well said. So if you're a dad listening. And you're thinking about, and you're opening your wallet, mate, I think about it all the time. My girls are 4 and 6. I'm like, what would I do? I was like, I've got a rubbery arm, and I'll do whatever. But I think it's also very important.
Just to round out that conversation as well, just don't forget that most of the time family law separations are generally pretty messy anyway. So that that's just sort of one thing that goes into the pot that family lawyers need to resolve.
Okay.
So it's I mean, it's not as if there's always going to be a perfect solution on that kind of thing, because family law bust-ups, when they happen, it generally is messy.
Yeah, nice one. You mentioned around second mortgage. What's the difference between that versus, say, putting a caveat against the property?
Yeah, good question. So just generally speaking, so a mortgage and a caveat are very similar things. They're legally speaking charges over the property, securing a number of things, but generally speaking, a debt owed on the property, right? Now, the main difference between a caveat and a mortgage is a mortgage will give you the power to sell the property if that debt is not paid or if there's been a default event under the loan. Okay, so you can actually exercise the rights of a receiver. You can come in, you can sell the property, and that's what the banks unfortunately sometimes do. A caveat doesn't give you that right. A caveat actually comes from the Latin word to warn. It warns people when they look at the title search that there's someone else who has some kind of equitable interest in that property, and generally speaking, that will stop further dealings in the property. right? Because people aren't going to want to go in there and they don't know what the equity is on the property. There's a warning over the equity and so a caveat will stop further dealings, but it won't give the holder of the caveat the right to sell the property. So it's kind of a sit and wait type thing. So maybe that's answered your question. The mortgage is probably the more powerful instrument to protect your rights.
Yeah,
probably unnecessary, I'd say, in your typical sort of parent loan situation. We're probably 50-50. We'd probably get 50% of our parents say, no, we just want the strongest protection. And if it's a second mortgage, that's what it is. And 50% will say, well, no, caveat's fine.
Yeah, cool. Yeah, nice. Good to know. Again, speak to your solicitor, speak to your family lawyer, find out what's applicable. Thanks very much. A big one here, we talked about this with SMSFs as well, is getting independent legal advice. This probably becomes, again, sprinted to get formal approval, sprint to get loan documents out. Now we're racing against the clock to get to settlement. And then it's like, hey, you need to get independent legal advice. Can't get in to see them for the next week or so. Now we're like cutting it very close for settlement. So this is particularly when buying through trusts, companies. Now someone needs to get independent legal advice.
Do you know why it's required?
Tell me.
Yeah, because a lot of brokers get so frustrated. Why are we doing that? And customers as well.
Well, it's the team that go, what is going on?
Okay, I'll give you a bit of, it's sort of interesting, but sort of frustrating when you sort of come to the modern day relevance of it. But so there's a high court case in 1983. It's very famous. It's called the CBA versus Amadio. And in that case, it was a little old Italian couple, and they'd sort of immigrated from Italy. They couldn't speak English, but they'd done really well, as a lot of immigrants did in those
Italian
days. They worked hard.
Mate, fantastic.
So they bought a house and it was unencumbered, and they had this son who could speak English, and he thought he was pretty flash. He thought he was the world's best stock market whiz, and he wanted to borrow some money from mum and dad so he could invest in the stock market. And of course, the CBA said, well, we can do that, but it needs to be a guaranteed by the parents and secured against the parents' property. Now, his investments blew up. CBA enforced on the loan, couldn't repay it, so they went after Mrs. and Mrs. Amadio's house, and it went all the way to the High Court because the lawyers for the old Italian couple, they said, well, it's unconscionable for the bank to exercise their guarantee in these circumstances because they didn't understand what they were signing. They were completely hoodwinked by their young son, and they didn't know what they were signing. They needed to get independent legal advice for the guarantee to be void, and the High Court agreed. And so there became this principle that in order for a guarantee to be valid, there needed to be independent legal advice. But I would argue that in the modern day, when you look at SMSFs and discretionary trusts, they're very, very different factual circumstances from the Amadio case. But the banks being banks, they've sort of said, well, we don't care. We've got this High Court case 40 years ago that says potentially guarantees can be void if there's not independent legal advice. We're just going to have a blanket rule across all forms of guarantee, whether it's parent guarantees or directors' guarantees of SMSFs, that the directors have to guarantee. Yeah. So that's where that comes from. So
good to know. Thank you very much. There we go. Like I said, we're learning something new today.
Yeah.
And what typically happens with a lot of banks is they want to have all the documents signed at the one time. Because what happens is we'll have someone in, I don't know, Hobart.
Yeah.
And then we've got someone like you guys here or someone else in Sydney trying to give them independent legal advice, but we can't get these documents co-signed. And again, they've got to be wet signed as well. So I think we're trying to talk about, hey, how do we factor this into timeframes rather than it just gets so close. And again, it's just another hurdle to get over when you get into settlement. We don't want to delay settlement.
And a little bit of a plug for our firm. So we're aware of that issue, and we've been aware of it for a few years. So we have come up with a solution on that, and it does sort of involve basically utilising Zoom, utilising digital signing where we can, and also just utilising Express Post. So we will essentially we'll book an appointment with our clients on Calendly. Yeah. We will require them to print out all the documentation prior to that. We will shoot them through the note of advice that we've got. I think you've seen that as well.
Yeah.
And then we'll have a conversation with them. If it's an SMSF deal, it's a pretty quick conversation. If it's a parent guarantor one, it's probably going to be about half an hour to 45 minutes. We'll talk about some of the things that we discussed. But then at the end, we will then sign the documents. And the Electronic Transactions Act does permit us to be able to witness those things digitally. So we are watching on the screen. We're watching the parents or the SMSF directors sign the documents. The stat deck is usually what it is, saying they've got legal advice. And then we get them to post it back to our office. We countersign and we send it to the bank. Yeah. So that's probably a 4 or 5 day process.
There you go.
Yeah. And that's pretty efficient. We're probably the more efficient firms at doing that. So yeah, definitely have to factor that into
that. Correct. And that's when you talk about 4 to 5 days and loan documents come out like a week and a bit before settlement. And then they've got to get back to the bank then to certify. Yeah, you can start to see, this is why like when people go, hey mate, why are you guys chasing us up? I'm like, because this is why. Yeah, nice one. Thanks very much. I want to come back upstream a little bit. So when people are engaging, I feel sorry for you guys sometimes. They're literally like, hey, it's Friday. We're going to auction this weekend. Can you review this contract? Oh, I did. Yeah. Solicitors and conveyancers got other clients as well, with all due respect. How do you get someone to engage you earlier? And then what ideally is your team's trained eye looking through a contract to sale prior to putting pen to paper?
Yeah, that's a really good question. And again, it would probably come back to the broker. Every broker will have their favorite conveyancer they refer to. They might have a few. If they don't, I would argue that's remiss of you. I don't understand how, as a broker, you could, and as an estate agent, how you can't have 2 or 3 conveyancers that you can call on a mobile anytime. I just don't understand how you could function. So my recommendation for the brokers is at the pre-approval phase. That's when you want to introduce the conveyancer. Okay. Yeah. And that's where you want to have the conveyancers have a conversation. They explain their fee proposal. They can talk about how many contract reviews they can do for, what upfront fee. Generally, you can be pretty negotiable and fair on that, particularly if they're first-time home buyers. You get some of their information at that point as well. We don't want to be sitting Friday afternoon asking, where's your permanent residency visa, right? That all that information that needs to have already been done, and we just want to be just reviewing the contract. So basically, the answer to that is it's always going to be hectic, it's always going to be stressful. But if you can engage with your conveyancer at the earliest possible time, even if you don't have a contract to review, that is preferred.
Yeah, correct, spot on. I think that's the gold standard, which is, hey, you've got in touch with your conveyancer, have it in your back pocket, just let them know you're actively looking, pre-approved. So there's no surprises when you just drop this contract to sell.
And then so you can sort of say, okay, that's the one with the permanent resident. That's the one who, they've got the first-time home buyers. In advance. You don't have to have those earlier conversations, which are sort of just generic to any property they're purchasing.
So, people are thinking, why are you mentioning something about permanent residency? This is because like the visas attract stamp duty. And so we've seen like, obviously the Offstate, I think it's Offstate revenue, whoever it is, go after clients from years ago going, you owe us X amount of stamp duty, and clients are freaking out. They're calling us going, how did this happen? What's going on here? It's like, mate, I'm not handballing, but this is something that happens under your jurisdiction, right?
Yep. And they're being rapacious, and the conveyancers have just absolutely got it in the neck because I'm talking more about New South Wales, but there's similar legislation in other states and territories where they've got very particular rules about what a foreign person is. Yeah. So a foreign person can sometimes include what we would regard as a permanent resident.
Yes.
Because particularly if they haven't satisfied the residency requirements.
People from the UK unwillingly, they've got an Australian partner, been here for years.
Yep. Oh, we've had that as well. Yeah, we've had we've had almost like married, living there for years. Yeah. And they've still got a 50% portion of that is vulnerable to surcharge duty, and that's a huge amount of money.
Great.
So
and plus they've whacked them with interest on top of that over the last few years.
Oh, it's been a horrible. Yeah. I think as an industry, I think the conveyancers have finally got through that. But it'll be on to the next wave next year with anti-money laundering. So it all just what does it say? Shit flows downhill. It feels like that for us.
Correct. Mate, take me through. Obviously, people know from a finance perspective when someone's looking at property, here's what happens next. The ball gets rolling. We get valuations ordered. We're going to the bank to get formal approval. What are you guys doing? Background work that no one's seeing when contracts have been signed.
After it's signed?
Yeah, after it's signed.
Look, I won't lie to you. There's a period there on a 42-day settlement where we're not doing a heck of a lot. We're probably reviewing other people's contracts.
Yeah.
We will order some searches. So we'll search, whether there's any outstanding council rates, any outstanding water rates, land tax, all that kind of thing. So those things get sent out and they come back. But there's probably a 2 or 3 week period where there's not a heck of a lot we're doing. And then 2 weeks ahead of settlement, then it all gears up. Then the searches come back. We start putting together settlement adjustments. We start preparing our PEXA workspace. So that's the online electronic platform where we now sort of basically do the settlements.
So if you're listening, PEX is like where the banks get invited, where you guys then coming into the equation as well.
Yeah, so like in the olden days, it used to be a literal physical room where you'd sit around and you'd in the one hand you'd have the vendor holding the deeds. In fact, actually, their bank would be holding the deeds, and you'd have the buyer holding the bank checks, and you'd have his bank as well. And it would literally just be like, you give that to him, he gives that to you, you give that to her, and that's your settlement. Nothing's really changed sort of structurally. That's still the same thing, but it happens electronically now. And as I said earlier, PEXA has sort of revolutionised conveyancing and the property market for Australia. We would never have got through COVID without PEXA.
I mean, some states, you got to call this out, some states are still on paper.
Not many now. Tassie's on board now.
NT.
NT and not. So NT's the last one.
Yeah, great. Yeah.
But Tassie was the one that, because Tassie, I mean, you might have some views on this, but I'm hearing now that's a bit of a hot market for buyers agents and that kind of thing. So,
I mean, it's one of those markets where I remember at the very, very start of my broking journey, good mate, buyer's agent, was like going down to Hobart and it's like, mate, this is ground zero. You got to get in.
Yep.
And everyone was like laughing at him. And I sent him a few mates. I said, mate, don't F this up. These are some good mates. And they got into Hobart like 10 years ago.
We'll be laughing, right?
Oh, they were laughing. And then it peaked and then it just sat.
Oh, did it? Okay.
It sat there for some time.
Okay.
And then if what you're saying is some early signs, and this is the thing, you're probably seeing early signs of where people are buying. Like you and I generally have what I call the best seat in the house. We get to see where people are buying, how much they're buying nice and early before it starts to really take off.
Well, I'd always said no to Tassie because I'd sort of said, look, that's, I don't want to be dabbling in a jurisdiction where I'm not doing regular transactions and I'm not going to bother to learn it because it's still paper-based. And I know I can't, we can't actually function efficiently on a paper-based system, but it's just gone to PEXA.
Nice.
And at the same time, sure enough, I'm just getting some buyers agents, send some clients there as well. So I've actually got two contracts to review later today when I get back from this.
There you go.
In Tasmania.
Inside scoop. Nice one. Thanks very much. Yeah. So I guess there's a flurry of activity leading up to signing a contract. Then it goes quiet. That's probably where it's picking up for us to then get approvals. Then we handball back to you guys, get ready for settlement because now we've gone quiet. Everything's locked and loaded on our finance end. Getting you guys ready for settlement, and then we all come to this crescendo, which is ideally settlements on track. Let's touch on this. Things are not perfect. We spoke literally before about the banks being imperfect as well, and things go off the rails. Settlements can get delayed. Settlements can fall over. For example, some people do freak out despite the fact that we're saying, look, it's okay. I think it's just emotions are running, and I shouldn't say just. Emotions are running high. How do we, as a team, sing from the same hymn sheet to go, this is under control? It just means that it could be a slight delay.
Well, let me just start by saying, we get PEXA's data and we're benchmarked against the rest of the industry. And we can see that the rest of the industry, they don't settle on time around about 15% of times.
Nice one.
So, that may not be the conveyancer's fault. That may be a whole host. It could be anything.
Mate, I'll tell you what, I've never, up until this year, and shout out to Kelsey Drake in my team because I kind of like, where's the settlements at? And she's like, the other side's not ready to settle. And I've never seen up until this year where I think the discharges on the seller's side is taking probably the longest and they're leaving it for the last minute. And that's where settlements are falling over predominantly from our perspective. But yeah, it's a phenomenon I haven't seen.
Yeah, I have seen it. There was, it was about 4 or 5 years ago.
Okay.
I think where it was shocking.
Yeah,
it was taking like 40 days. I think I'll name them. I think it was CBA. 40 days for the CBA to process discharges. And bear in mind that the average settlement period is 42 days. So, and that led to a lot of delays. And then something happened. The banks got their stuff together. Maybe they chucked more bodies at it, and then it started getting better. And then, as you say, now it's starting to get worse again. So
they're holding on to discharge. I was very fortunate. I got to sit down with a number of the heads of banks. One of the top brokers flagged this, just going, the discharge process is abysmal.
Yeah.
It's delaying settlements because the outgoing lender is just sitting on these discharges for like 30 days. And so as brokers, we got to be sometimes tactical about when we are submitting the discharge. You submit it too early, kicks in a retention team, for example, you lose the deal. That's why you hold it generally to formal approval.
Okay.
Because otherwise, if you submit the discharge too early, the bank's retention team kicks in and then tries to save the deal.
Wow.
But
you don't want that because that's just going to
well, it's not only that. Sometimes we're going to a different lender because servicing or it's policy. And it's like we can't stay with that lender, but they're going to dangle a rate and the client forgets the rate's irrelevant when you can't get the money. And we're having a different conversation here.
Yeah.
So that's why we'll lodge the discharge sometimes around formal approval. If we know the bank just 30 days, you got to lodge a discharge when we submit the new loan application as well. So there's a whole set of rules behind that.
But just one thing so we're talking mostly on the vendor side and things that can cause delays on the vendor side. Buyers need to be aware that they cannot control that. There is nothing you can do. Really, there is nothing you can do to compel the vendor to settle on time. There is no penalty rates for vendors.
When the shoe's on the other foot, right? Because when it's the other way around and as a
if purchaser, you're late, the sword of Damocles comes down on you. You're generally going to get a 10% per annum per day penalty fee. Okay. On $1 million purchase, that's a few $100. If the vendor's late, nothing. The best you can do if you want to is serve a notice to complete, which requires them to settle within 14 days. But even then, after 14 days, if you really want the property, all you can do is either terminate with a notice to complete or race off to the Supreme Court and get an order that the property be sold. And that's going to cost you a lot of money. So really, it's so unfair for the buyers. But that is life. What you need to know is do not make any sort of terminal arrangements with respect to the rest of your life completely reliant on settlement happening on the day that it's on the contract. So don't terminate your lease. Don't.
Thank you.
Yeah.
Thank you.
Yeah. Don't
book the removalist truck to be there at 2 p.m. when settlement's at 2 p.m.
Give yourself some leeway. Like buy it first, give it 3 days or so, have it vacant. Go get it deep cleaned.
Spot on.
Right. Go get the locks changed. Do some of these things that you should do that most people don't do. And then on day 3 or 4,
thank you.
That's when you sort of
you know what I say?
Yeah.
If you got a purchase, settle on a Wednesday or a Thursday.
Yes. Yep. Perfect idea.
Oh, mate, because everyone's trying to move on a Friday.
And then aim for the weekend to move in.
You've just got time. You can book a removalist truck midweek, for example. Like if settlement falls over and you got a day late, you're not waiting for the Friday then to the Monday.
Yeah.
Like it just makes so much sense. So I don't understand. And Friday's the worst day Friday afternoon is the worst day to 100%. Be settling. I just don't understand it.
If you are late, because we're speaking about vendors late, just say something happened on your side. If you sell on a Friday and just say your bank drops the ball completely, or your conveyancer drops the ball, let's use that as an example. Or your broker. You're going to pay not 1 day's late fees, but you're going to pay 2 days late fees.
Because the weekend.
You can't settle on the weekend.
You can't settle on a weekend.
So what you said makes great strategic sense. You should really settle, I think, for both vendor and purchaser on a Wednesday. Yeah,
I agree. I tell the team all the time, like, just try and see if we can move it to a Wednesday or something and give ourselves the breathing space. Obviously, we don't want it. But again, life is planning. Hope for the best, plan for the worst. And I think when you have everyone aligned, and this is I think you came at the very start going, you pick your team, right? Have you heard of the broker? Have we heard of the conveyancer, for example? I don't know what your industry studies, but you got to understand broking, I think it's like 48% of mortgage brokers are solo operators. Man, I can't do what I do by myself. Literally, I could not do what I do without a gun team. So when I've only got so many hours in the day, this is you got urgent and important. The settlement is urgent and important. Everything else just falls to the wayside as well. It's the same thing with you having a team. Literally, you're on a call before this, right? Putting out a few fires. And I think that's probably a good part of our day is literally just putting out a few fires. We've got this under control and almost this pattern recognition of going, that looks off track, that looks on track, for example. And that to me is my trained eye. With my 10 o'clock team call going, that's off track, that's on track, and trying to make troubleshoot before it becomes a fire.
Absolutely.
Hey, Jared, thanks very much, man. I really appreciate it.
Obviously, that was great.
You sit on a mountain of knowledge. I know your team, shoot the lights out as well. So
thank you.
When you talk about benchmarking against the industry, it almost just goes, there's no ego, there's no chest beating that's involved. It's just more going, how do we stay ahead of the curve and how do we be top tier talent as well? So, mate, kudos to you. Thanks very much.
Thank you, mate.
I appreciate it.
Thanks.
Guys, if you love that episode, like I said, a lot of the comments that we do get is we like that we go left of center. So it's not just always straight property or where or what people are buying. It's more just going, this is the entire journey and transaction that comes along with building a portfolio out. Someone like your solicitor becomes an absolute little lock in your team as well. So if you found this episode helpful, like we say, share it with a partner, reach out to Dot and Cross it if you need some legal support as well. Jared's not here to kind of plug or farm or fish for business, mate. He's really just here to share his knowledge. So thank you very much. and we'll catch you next time.